We live, we back at it. Good evening, good evening, good evening. What's up, y'all? Let me pin this comment. Good evening, everybody. Good evening, everybody. We got class again tonight. Tonight's class, how to fund your business using life insurance. We have been taught that life insurance is only to be used when you die. Tonight we're going to talk about life insurance is supposed to be used while you're still alive, and we're going to talk about it, how to do that while you're still alive. Shout out live from Costa Rica, from Colombia, excuse me. What's up, Rico? How you feeling? There we go. All right, ladies and gentlemen, get your paper and pen ready. You know I teach every evening. Good evening, good evening, good evening. Today we are going to learn. We're going to have class tonight. Andre Green, my guy, what you doing, bro?
I'm good, Herman. How you doing,
I'm
brother?
feeling good, man. I'm feeling good. What's up, Finesse? How you feeling, bro? Listen, tonight we giving away tickets to the Blueprint Summit, bro. Is that a
That
rumor?
is that is a rumor. The rumor is
The
true.
rumor is true. So you are going to give away a ticket, a VIP ticket to the Blueprint Summit. All right, because my guy Andre purchased a ticket to the Blueprint Summit VIP ticket. So my guy Andre Green, bro, thank you so much for tapping in. But we're gonna talk about that at the end. Thank you for tapping in tonight. I appreciate you making time. I know you're super, super busy. Tonight, bro, we are going to talk about how to fund your business using your life
Using
insurance.
your life insurance. I gotta. You're gonna be my case study for
I'm
today.
a,
So I'm gonna use you as the example because we've never actually spoken about
we've
this.
never spoken about this. So when
All
we
right.
was talking before and you sent that back, and I was like, let me reword this. I was like, fund your business using your life insurance.
Yeah.
All right, bro. So this is for people with good credit and bad credit.
Yeah. It doesn't matter about your credit.
It doesn't matter about your credit. Okay, so tonight, because I gotta put this on YouTube later, so I gotta figure out the caption. How to fund your business with bad credit. All right, so we're gonna fund your business with bad credit. How much we talking, bro? How much we trying to fund people? How much we
So
gonna get them?
it's like every time everything else that we talk about when it comes to life insurance, it's based on your scenario, right? So
Mm-hmm.
depending on your size
Mm-hmm.
business, you can have a small amount, you can have a large amount, right? Well, I'm going to get into the details of how it looks and how the mechanics of it works as we go through the example, but there is no cookie cutter number. Like you literally can do it with almost any amount. The more you have, obviously the better it's going to be. But there's no minimum. Well, let me not say that. There is a minimum, but it's quite low if we want to look at it that
The
way.
minimum is quite low. Okay, bro, before we get started, introduce the people to who we have, who you are, what you do for a living, and let's start to teach the people some free games, some free information. So talk to us, bro.
Yes. So
So introduce yourself to the people, bro.
thank you, Herman, for the intro. Thank you for letting me jump on this live with you guys. My name is Andre Green. I am well. First and foremost, I'm a kid from Queens, right? From Queens, New York, born and raised. I got into the finance industry through real estate. So I've been in real estate since 2004, 2005. That's where I got my feet wet, learning about mortgages, learning about rentals. Became a commercial property manager for quite some time. And while I was doing that, I was actually working for a bank. So I worked for a bank for about 5 years,
Mm-hmm.
writing leases, learning about how money works at a very high level. And because I worked for the bank, they made all of the employees get licensed to have for life insurance. That was my first time getting licensed back in 2008.
Mm-hmm.
So learning how money works on a high level, how real estate works, how you can finance deals, how you build actual wealth. I fell in love with real estate and I fell in love with how money works. Fast forward a few years, I was a commercial property manager. Then I managed about 5,000 apartments in Manhattan. Then I worked for a developer. We were building buildings, converting schools into apartments. I started my own brokerage, and then I came back to real estate again. And I
Mm-hmm.
came back the second time because as I was a real estate broker and I operated my own business, I was coming across a lot of clients who were from my community, who looked like
Mm-hmm.
me, who grew up in the same neighborhoods I grew up in, and they were losing their homes. So we're talking about 2010, 2011, 2012.
Mm-hmm.
And what I realized when I went, because my background was with finance banking, so I had a lot of information and knowledge around short sales and how to help people, save their homes, not always sell their homes.
Mm-hmm.
And I had a scenario where it happened to me a couple of times, and I realized that my community wasn't being educated about how you can use other financial tools to protect and preserve their wealth. One of those things being, if you own a home, for anyone who owns real estate assets, you need to have life insurance, right? Because we have car insurance and it makes sense. It's for our car. You have life insurance because it protects your life. That's what it's for. It's not called death insurance for a reason.
It's called
It's called
life.
life insurance.
I have a funny joke. So I believe in marriage insurance also. You know what marriage insurance is called?
What's that called?
Prenup.
Prenup. Yeah, I'm not touching that one.
You're not touching that?
I'm gonna let
Come
you
on,
run
bro.
with that one.
Go down the dark hole with me, bro.
No, absolutely not. I
No,
don't
you're
need
not
people
gonna do
hate
it.
me. You already got your wife. I'm out here
Fine.
single still. I'm good. I'm not touching that one. I'm not touching that one.
All right, bet. Fine then. Don't get marriage insurance though. I'm a bad person.
Listen.
All right.
There's
So
ways
if
to
you have
protect
a
your
home,
assets.
right, you should have homeowners insurance, car insurance, and it's called life insurance, not death insurance, because you can use it while you're what? Alive.
Exactly.
So let's talk about that.
So from there, I realized that people they didn't have any type of asset protection for their largest asset. If you have life insurance, one, if it's set up properly, you can access the cash while you're alive. But two, it also kicks in for the ones that are living after you're no longer here. So if you have life insurance and you have a large mortgage balance, you pass away, your house gets paid off, or it can be paid off with the life insurance that you had on yourself while you were here. Now, I just said all that to say is that as I learned this, and I went down a rabbit hole of how financing works and how you can use multiple tools to sort of, secure your wealth and change your life and your legacy, I got lost in the sauce when it came to how much information I learned about what you can do with life insurance once you understand how it works. So the history about it, the myths about it, why our people, our community doesn't use it, is because in the beginning we weren't sold one, it was overpriced to us. I mean, when insurance companies first came out, there was no rules, so they can charge that look like this one price, and they could charge us a totally different price. There was no standards for anything. So when you start to understand why do our grandparents and our great grandparents, why they don't talk about it and push it, is because when it came out for them, it wasn't a good tool. Times have changed, and with the time changing, we need to change. We need to adapt new policies, new thoughts, new guidelines as to how do we manage and use our money. So I learned all of the magic sauce when I was out on my journeys, figuring out how to get out of debt, how to take my $30,000 job and build $1 million portfolio with real estate. I did all of this through life insurance and the proper financial tools. Now that I know how to do it and I know how to set it up, now I'm bringing all this back to my community to teach everyone who will listen to me from the top of my lungs. I want y'all to learn. I want y'all to win. So how do we do that?
How do we do that? How do we use life insurance while we're alive? I wanna ask this quick question, bro. I was taught this, that if I make $100,000 a year, right? My life insurance policy should be 10 times that. It should be at least $1 million. Is that rule of thumb? Is that math correct?
It's in the range. It's in the range. You'll hear anywhere from seven to 12 times, depending on who you ask, depending on where you are in life, right?
Okay.
If you don't have that many assets, that might be enough. That might not be enough. It depends on where you are. But rule of thumb wise, absolutely 7 to 10 times is a good place to be. Just for perspective, how much do you think it costs to get one child from age 0 to age 22 through college in America today?
In America. So this is a great question. I should know the answer to this because I have a lot of insurance. So this is a great question. From 0 to college, assuming my child is going to college, how much does it cost to raise that child?
Correct.
All right. My children are in private school, so I'm gonna take that math out. I'm gonna guesstimate about $300,000 to raise a child from 0 to 21.
It's a good guess. Good guess. The average, depending on private school and a couple other things, is $475 to $650.
$475. I mean $1,000. Yeah, about half a
$1,000.
million.
Yeah,
About half a
about
million.
$500,000.
That's how much you're spending between daycare. Listen, daycare is $200-300 a week, right? You gotta feed them for 20 years. I think that's an about right number. Yeah. 100%. These kids are kicking my ass.
So, I mean, that's just to give you an idea of what it would take to get a child. I mean, that's one child,
That's
right?
one child.
Now, most people have multiple children, right? So, how much insurance do you need to have just in case, right? And this conversation isn't around that, but it needs to sort of
Those
sink in that.
Yeah, those numbers should be in people's head. All right, bet. So, bro, in the comments a lot. First of all, shout out to 100 mile mil wide Millie Emily 100 mil Emily. Thank you for the badge. Dang, I forgot my. Oh, I see. Before you go deeper, I see a lot of people dropping IUL. Is that what you're gonna talk about tonight?
Part of it is an IUL, right? So we're going to talk about what the insurance, how it
Mm-hmm,
works, what insurance is, and
mm-hmm.
then how you can sort of use it. But even with an IUL or a whole life policy, setup is what's important. And then
Ah,
once you understand the setup, how do I use it, right? So
thank
it
you.
can be an IUL product.
Thank you,
Not
bro.
saying
Thank
it's
you,
not.
bro. Because I want everybody to know we're going just a little bit deeper than all the same stuff you see on social media. We're going deeper. Yes, it's IUL. Yes, it's the term. Yes, it's whole life. But the setup to everything we do is crucial to protecting our assets and multiplying our assets. All right, bro. Let's talk. Talk to us about how to fund our businesses using life insurance policy. What type of policy are we supposed to have?
So it's going to be a whole life. And let's start from the beginning, right? So when people say IUL,
Mm-hmm.
IUL is for Indexed Universal Life. It's a form of a whole life policy, right?
Mm-hmm.
So for the rest of the conversation, I'm only going to say whole life because it falls under the umbrella of whole life. It's not term
Okay.
insurance, right? So when it comes to the setup of it, you have to set up a policy where it allows you the ability to, one, max fund it or super fund it or overfund it. Those are the three terms that you normally hear people say when it comes to IULs or whole life.
Mm-hmm.
You have to overfund or max fund the policy.
Mm-hmm.
Now, what does that mean in layman's terms?
Mm-hmm.
I'll ask you, Herman, when you get paid from, salary from your job or you get income coming through the door, where do you normally put it?
401k, retirement account,
Where else do you put it?
uh, my savings account,
Where else do you put
checking
it?
account,
Where else do you put it?
bills.
Where else do you put it?
Oh, Jesus Christ, under the mattress. I'm running out of places.
Right. So those are the standard answers that everybody uses, right? And when I break it down this way, it should sort of shift your thought process.
Mm-hmm.
When you get money, most people, 9 to 5 or entrepreneurs, when they get paid, their money goes to two places. One is bills, two is savings. Most people don't actually put money in savings. But if they're disciplined enough, they should be saving money. So the
Mm-hmm.
question I ask everyone is, well, how much are you saving every year? Like, what's your savings goal? What should be the first thing you pay out of any money you ever receive should always be yourself.
Right.
That's
Always
the first person that gets paid.
pay yourself. Mm-hmm.
Always pay yourself first. So you're going to be putting that money away already. People normally put it either into a money market or into a savings account. Some people put it into their 401k, which is fine as long as you're getting a match. If you're not getting a match, we need to have another conversation. See me at the Blueprint Summit. I'll tell you why it's not a great idea, but we can go through that, go down that rabbit hole another time. But if you're already saving money, I'm going to show you an alternative place to save that money. That one step will change the trajectory of your money. So
Now, so this is me. When people ask me for money, I always say I ain't got it. They're like, "You got it?" I was like, "I ain't got it," because I don't keep my money in a bank,
correct.
because banks are supposed to be only used for transactional purposes only. It should not be a
Correct.
place where you store money.
Correct.
That's a terrible idea. Between the 0.1% that they're giving you plus
Mm-hmm.
inflation, you're literally throwing money away in there. So that's why it always needs to be in an asset that grows money. But I know you're kind of talking about putting money also in an insurance policy as a savings vehicle.
As a savings vehicle, and that's the part I want to talk about, because what's really important is people have a tendency of saying insurance is a bad investment.
Mm-hmm.
You know what I say to that? You're absolutely right. Insurance is not an investment.
Mm.
The closest thing that you can compare an insurance policy to for savings purposes is an actual savings account. So now when you compare apples to apples, what are you getting at the bank? 0.1, 0.3, 0.5, maybe now, because they
Mm-hmm.
started to raise rates.
Mm-hmm.
But with an insurance policy, with the right carrier, you're looking at, on average, I'm gonna go on the low end, 5 to 7% on the low end, right? Start throwing out IULs, you hear higher numbers, but regular whole life policy, 5% interest on your money.
On your money. So when people say, I want to make sure, because you said something key. When people say, "Oh, using life insurance as an investment policy is a bad investment," you're right. It is.
It's not an investment.
It's a good safe place to store your money rather than a
Correct.
savings account, apples to
Apples to
apples. So instead of putting in your savings account where
Right.
they're giving you 0.0%, or
Mm-hmm.
you got to lock it up in a CD
Mm-hmm.
for 6 months and then they'll give you 5% maybe,
Right.
put it in a life insurance policy that'll give you, on a bad year, 5 to
Correct.
7%.
Correct. And then on top
Gotcha.
of that, when you put your money in a CD or your savings account, you know what they send you at the end of the year as a Christmas gift?
Taxes.
A tax
You got a
a
tax
tax statement.
bill.
You got to go pay tax now on it because that money that you gained in interest is now taxable. That does not happen inside of an insurance policy because all of the growth inside of there is tax free. That's one benefit we're gonna touch on as to why it's better to put your money there than your savings account.
Right.
But let's move on from that.
Take notes. Stop being cheap. Share this live out. I bet you never heard this before. All right, bro.
Let's go.
Now listen. I know there's some people here, bro. They're hearing some stuff for the first time. I know you're about to go to the next level, but I got one question. I'm gonna let you lead. I promise. Yo, Herm, I heard on your live you said put money in a life insurance policy as a savings account. But what if I need to get the bread out? What do I do?
Great question. Great question, right? So, depending on the policy setup and depending on who sets it up, you have access to your money 31 days after it goes into your account.
31 days.
31 days later. So let's say you put the money in March, put the money in April 1st. May 1st, you'll have access to your cash. It won't be all of your cash. Let's understand that you're putting money into a life insurance policy. So a portion of it is available as cash to you. So you can borrow up to about 85, 90% of it, depending on which company it is that you place the money with.
Excellent.
The
Okay, I just
money,
wanted to make sure we was able to say that. So you get access to between 80 and 85. What's the percentage of it?
80 to 90%. Let's put that as the range because depending on what company it is, it'll vary.
Okay, 80 to 90%, depending on how you set it up, is important, and who you set
Who
it
you
up
sell
with.
with.
This is important, guys,
Yes.
because I don't want you to take this live and then run with it. Oh, I heard. Make sure you hear what we're saying, how you set it up, and who you set it up with, so you can have access to that capital if you're going to use it as a savings vehicle. Okay, bro. So I'm gonna let you lead now. How am I using this life insurance policy to fund my business? What are the 3 steps, the 5 steps? How do we do it?
What? Can you hear me?
Yeah, I can hear you. Yeah,
Okay.
you was going out a little bit before, but you're
Yeah.
back now.
Everybody's calling me all of a sudden. I forgot to put my phone on.
Do not disturb. Yeah, I had to do that too.
So yeah. So we're gonna use Bella Sloan as the example for this conversation. Okay.
Okay.
So Bella Sloan's been open for a few years, right? You are the owner. A couple
Mm-hmm.
years ago, about a year and a half ago, you announced that you were stepping down as the CEO of Bella Sloan, and one of my most favorite people in Philadelphia was stepping into the new role of CEO,
Right.
Damaris, right? So the business owner, and you could have done this as a business owner yourself. You could have taken out a policy, or should I say, Bella Sloan could have taken out a policy for the company, and you, who is the operator and owner of the business, would have been the insured person
Mm-hmm.
because you're extremely integral and important to the business running.
Mm-hmm.
So, what happens when Bella Sloan owns a policy versus Herman owning a policy?
Uh-oh. Uh-oh.
Now we're going high level. This is not regular stuff anymore, right? So now that Bella Stone's the owner, Bella Stone has an expense on the books to the company because Bella Stone is putting this money away for Herman. But Herman's like, well, I don't want to be the CEO anymore. So now what happens to all of that money that's in this account? Well, Herman has an option because you are the owner. You can move it from yourself as the owner to the new CEO, which would be the Damaris, or you can leave it on yourself and open a new policy for Damaris.
Mm-hmm.
A couple things will happen when you do that. As a business owner, you have a lot of nuances and things to worry about as a business owner. One, how do I attract the right quality of people to my business? I want to make sure I'm getting the best person for the job.
Mm-hmm.
And when you get, expensive folks, they want expensive things like
Right.
benefits, right?
Mm-hmm.
What do I get besides just getting paid to do this job? Because you can almost go anywhere and get a job, but what else about this job will keep me here?
Mm-hmm.
So you're getting income coming into the business. Bella Stone opens a new policy for Damaris, right? Because she's now the CEO. She has an executive title. She's really important to the business, running day-to-day operations. You don't want to lose her. So what you're going to present to Damaris is, hey, Damaris, I really care about you and your family. So I want to make sure if anything happened to you while you were working here, we're going to pay life insurance for you. You have your family is protected. You have kids, you have loved ones. We want to make sure that there's something going to your family in the event I'm stressing you out too much and all this work takes over and it wipes you out. Your family will be in some way compensated for what you got. Now, how much money are we talking about we're going to put into these policies? Let's just say, for argument's sake, it's $50,000 a year.
Mm-hmm.
Okay? And we're just talking about only the Damaris policy. We're not talking about your policy that you also have.
Mm-hmm.
So with the Damaris policy, you're putting away $50,000 a year into the policy.
Mm-hmm.
This is going well, things are flowing by, and then you realize, you know what? I see another business that I think would be a great add-on to my business. I want to go out and buy this business. This business, $100,000 to get into that deal. Let's say overall it's $1 million to buy it. Let's say it's $500,000 to buy it. 20% down that they're asking you for as a new owner, you got to come up with $100,000. Normally, everyone's first thought is, I got to go pull $100,000 out of my bank account. I got things going on. I got to pay payroll. I don't really want to do this. Called me, Herman, one day. We were just checking in. I'm like, you're like, hey, Andre, I'm thinking about, buying another business. What do you think? Because, we have these financial conversations all the time.
Mm-hmm.
I'm like, I think if it's going to add bottom line revenue to the business, then why not?
Mm-hmm.
Yeah, so now I'm just trying to figure out where to pull the money from. I'm like, well, why don't you just pull it out the insurance policy that the business has? Like, what do you mean? You've already racked up $250,000 in this account that you have life insurance for. Keep in mind, this $50,000 a year policy that is insured, but owned by the company, gives a death benefit of, let's say, $4 million.
$4 million.
$4 million is a death benefit on the policy,
Mm-hmm.
right? You've got cash value in the policy at this time of $250,000.
Holy crap!
You can borrow money against the $250,000 to go reinvest it into another business or back into your business. We want to do a blueprint summit in Italy.
Mm-hmm.
You want to put the whole
Right.
bill. You're pulling money out of your policy to fund this next venture. So putting it into another business is the best use of the money, because now that money is working not only inside of the policy, but it's also working in acquiring another asset for you.
Okay, let's take a pause for a commercial break for us regular folk, because you started talking Chinese, and I'm not gonna allow you to lose my people. So we've been putting this money into this insurance policy, because I'm gonna ask you a question about this policy. That has for example, a death benefit of $4 million. But a cash value of $250,000, because we've been putting money in there. I can go borrow up to, let's just 80-85%, depending on the policy. I can borrow that money to go purchase an asset, which is another company. So that's how I'm leveraging insurance to go purchase a business or to fund another business.
Correct.
Now, what on earth type of policy is that? What is the name of the policy? What is that?
It's a whole life policy.
It's a whole life policy. Has the capability of doing that.
Yes.
You kept saying something underlying. It depends on what type of policy and who set it up and how it's set up. Can you talk about those nuances? Because people don't know. I didn't know my whole life can do that. What type of what setup needs to happen for this whole life policy to be able to have that power?
So first and foremost, it should be set up with a mutual fund company, right? So I'll give you a couple of ones that I'm using already.
Write that down. That's important what you're saying. Because if you have a whole life policy with a company that is not a mutual fund company,
like Allstate,
or
State
Farm, it's not going to work.
But it's not going to work.
So your insurance policy needs to be with a mutual fund company. What is a mutual fund company, and why does this policy only work with a mutual fund company?
Great question. So it doesn't only work, but that's the best use of it, right? Because there are some stock companies that will do it, but they get a little crazy with the red tape. But let's say the difference between the two. A mutual fund company says if you own a whole life policy with this company, I'll use Mass Mutual for this conversation. Mass Mutual offers whole life. They also offer term life. If you have a term life policy with Mass Mutual, you are not considered a member of the mutual fund company because term life doesn't qualify.
Gotcha.
If you have a whole life policy, you're considered a member of the mutual fund company, which means at the end of the year, when the company does their books, their P&Ls to see how much profit or loss they had, well, these insurance companies are not stupid. They're making billions of dollars every single year. No, billions with a B. With a
Billions.
B. Billions of dollars every single year. They redistribute their profits to policyholders, or they're not shareholders, they're policyholders. So in order to be a policyholder, you have to own a whole life policy.
Gotcha.
Where the interest and your dividends come from every year from the company. That's why, with the example I gave you, you put in $50,000 a year. At the end of 5 years, you don't have 250. You'll have more than 250 because they're giving you interest on your money every single month throughout that 5 year period, which is why when I say you can borrow 80 to 90% of it, you might actually be able to borrow more than the 250. Just for our example, we used 100, but you could have most likely borrowed more than 250, which you can see easily when I do an illustration for anyone. You see how much money you'll approximately have in your policy at the end of 5 years or 10 years or 20 years, right?
Right.
But to keep it simple, right? You want to have a mutual fund company. 2, whoever the agent is that's setting up the policy has to set it up with the ability for you to max fund it and allow you to borrow from it.
You have to say that out loud once you are setting up this type of policy. So number 2, what does the agent have to be doing?
Set it up to be able to max fund it and also allow you to borrow from it.
Got you.
Say the mutual fund companies are important because most of the mutual fund companies will allow you to do so.
Okay. Understood. Now we got some scammers in the comments. I'm teasing y'all. Do we have to pay back the money?
I mean, if
No,
you
we on a
want to.
Andre, we on a recording line.
Yes, we are
And we
recording.
on God's internet.
Absolutely.
So I borrowed a 250. Like, what's up? I gotta pay it back.
Technically, you don't.
Technically, you don't. You gonna say that on the internet, bro?
I said I'm all about the truth. I'm only gonna tell you the truth 100% of the time.
Bro, I'm about to hang up the call. I'm about to hang up the call, bro. I'm about to hang up. You can't be saying that, bro.
Listen,
technically, you don't.
Technically, you don't. And here's why. I'm using the same example.
I'm
That
listening.
policy that you have that's insured by that Sloan owns, it's not insured by Sloan, that they own, the death benefit on policies is $4 million for our example. You have, let's say you maxed out the cash you could pull out of it, you pulled out all 250. All the money you put in there, you took it right back out. Something happens to the insured person, which in this case would be Damaris. Your policy is supposed to pay out $4 million, but you owe the insurance company $250. What do you think they're gonna do?
They're not gonna cut you the check for $4 million. They're gonna cut you 3.75.
Exactly. So you didn't pay it back yourself. It got pulled from your death benefit.
Oh,
so
they getting their money. They getting their money.
Some way, somehow, they're gonna get their money.
They're gonna get their money. But for my scammers in the comments, why? But it is best to pay back the money.
And this is why I advise all of my clients to pay it back. If I told you that inside of your piggy bank was $250,000 and you can take it out whenever you want and you took it out, but once you take it out, you can't go back and grab another 250 because it's not in there anymore. You borrowed it the first time. So in order for you to create what's called, and I wish we had a little drawing thing. You know why it's called infinite banking?
Why is it called infinite banking?
It's endless. You know the symbol for infinity, right? The sideways 8, right? If the on and on and on, and there's no limit to it. You can keep going as long as there's funds available. That's why it's called infinite banking, because you are now the bank. Because when you go to a bank, they never run out of money somehow.
Got you.
Always have money, and that creates the cycle of it to be infinite banking. You got to take the money out, put it to work, and then put it back in. And as long as you continue to repeat the steps, you'll always have cash available. Which is why I tell people you never run out of money once you figure out how this thing works.
So I think this is something interesting, just to rewind a little bit. Number one, we first set the foundation on this call by using a life insurance policy as a savings account instead of technically a bank account savings account for tax reasons, to fight inflation.
Correct.
and you can borrow the money to invest in another business
Or
while
your
the
own
money,
business.
your own business, while
hmm
the money is technically, because I think that part we didn't
We didn't
say.
get to that
If
part
I
yet.
have 50, yeah, we missed that part. We're gonna talk about this, and I'm gonna
hmm
say it out loud. And I want you to correct me as a professional.
hmm
So I have the 50,000 in there. Let's just say, for instance, because I've been saving money from Bella Sloan and putting it in my piggy
hmm
bank. I take the 50,000 out to go 40,000 out because I could borrow 80%. I
hmm
take 40,000 out to invest in something else, another
Yep.
business, to fund back into my business, right?
Correct. Yep.
But technically speaking, when I look inside this bank account, I technically still have 50,000 sitting in there.
Yeah. When you look in the account, yes, it still shows that the full amount is still in the account.
So talk to everybody about this is what another that's one of the key points about infinite banking. What does that mean? So I borrowed money out, but it still looks like the 50 is still in there. What does that
So
mean?
pretty much
How does that work?
how it works is that one of the things that you can do with an insurance policy that you can't do with your savings account is that if you have money in your account at the regular bank and you go and make a withdrawal, what stops right away is whatever interest you gained on the money that was in the account. The day you pull the money out, you stop receiving interest right away. When you have the money stored inside of an insurance policy in a cash account, you're not actually making a withdrawal of your money. So the interest that you're receiving every single day from the money being in there still happens even after you borrowed money from the insurance company. So they're not taking your money and giving it back to you. They're taking money from the insurance company and lending it to you and using your money as collateral, which is why they won't let you take the whole thing out.
Got you. Oh, and they're using your cash as collateral. Got you.
Collateral.
So the 50,000, I took out 40. It still looks like there's 50,000 in there. That 50,000 is still accruing interest.
Let me add this also. You're also paying interest on your loan, the money you borrowed. You're gonna pay interest on it because it's a loan,
Because it's a
right?
loan. Mhm.
It's a loan. Now, I like to tell everyone this because I use this on a regular basis to buy cars. What's the interest rate right now if you wanted to go buy a car from Mercedes Benz, BMW, or Honda?
If you got good credit, 6, 7%. It's ridiculous right now.
Crazy. It's crazy on top of the down payment and the minimum credit score, right? So if I need to buy a vehicle for my business, I can pull money out of my insurance policy, which I do,
Hmm.
and buy a vehicle. My interest rate is around 4.45, 4.45 right now.
It's cheaper.
On a loan, it's cheaper to borrow money from myself than it is to borrow money from the bank, Mercedes or GM or Bank of America or Chase, right? It's cheaper and the qualifications are much less than what they're asking me for anyway. They don't ask, it's not dependent on my income or my credit score. It's how much funds do I have in my
In your
accounts. That's it.
account.
All that matters.
Got you, got you, got you. I see that. And the point always is to pay back the money because the compound interest that you're growing over time. Now, does the death benefit increase depending on how much I keep putting in there?
You're getting too deep on them, bro.
Oh, my bad.
You get
I
you
gotta
getting
let you
too deep
lead.
on them.
I gotta
You
let you
getting too
lead.
deep on them. You
My
getting too
bad.
deep on them.
My bad, bro.
I know you know enough to be dangerous right now,
So talk to us about that part. Talk about the
right?
death benefit.
So what happens with the death benefit? If your policy is set up properly, and here's a nice little trick for anyone who already has life insurance to take a look at the current policy. If you look at your current policy and your death benefit from whatever year it started all the way to the bottom of the illustration is the exact same amount, your policy is not set up for infinite banking. I'm gonna tell you that right now.
Say that again, because somebody just said that in the comments. Mine didn't grow for 3 years, so I stopped it.
Okay, that's different.
Hmm.
There's two things. One thing is if you have a life insurance policy, a whole life policy, and if in year one, let's say it's 500,000 death benefit, and then in year 45 it's still 500,000 death benefit, your policy is not set up for infinite banking. It's not set up for maximum growth. It's not set up for interest accrual. It's not set up for a lot of things. If on your illustration, it looks that way. There's no growth in your death benefit. Your policy is not set up correctly to do infinite banking. Period. You can't do it with that policy. I can tell you right now what I'm looking at it.
Got you, got
So
you.
if your policy is set up correctly, you'll notice that over time, your policy will start at a relatively low death benefit number
Hmm.
and increase over the years more and more and more as your policy grows. So the more you pay into it, is the more your death benefit grows, which is the more your cash value also grows.
So let's take
happening tax free.
let's take a commercial break, bro. If you guys want to tap in and get more information about this, first of all, comment the word mentee below, because Andre is one of the mentors that speaks in Bellstone Enterprises, and he has like a 2-hour class where he goes in really, really deep with this. So comment the word mentee below so we can send you the link so you can join the mentorship so that you can watch this video and many, many other things that we teach. So comment the word mentee below. Don't be shy. We meet 5 times a month every single week, and we go really, really deep stuff we can't talk about on the internet right now. I want to flip it just a little bit, bro.
Mm-hmm.
Can you talk about beneficiaries of a life insurance policy? Like, let's go a little high level.
Mm-hmm.
Making my trust the policy, the beneficiary, making my business the beneficiary. Can we talk about that a little bit? So
Right. So
I
actually,
passed away.
I didn't even tell you. We didn't even get to that part yet. So let me
We
tell
didn't get
you
to
what
that
actually.
part
We didn't even
yet.
get to that part yet. Right.
Go
So let me
ahead.
tell you what happens. Right. So the policy that Sloan owns, right?
Mm-hmm.
The same policy from before, that Damaris, because she's an executive of the company, she's the insured person. So you have an insurable interest in this person. That's really important too.
Mm-hmm.
If you own a business and you want to put your life insurance policy in the business name as the owner,
Mm-hmm.
the person that's the insured needs to have insurable interest, which means they need to be a part of the company. It's not some
Right.
random person. It's not your homegirl or your friend.
Mm-hmm.
The person needs to be relevant to the business.
Mm-hmm.
First thing, you've now offered, and I'm gonna tell you this up front. A lot of companies, a lot of regular corporate companies, big ones. I'm talking about the big banks, IBM, Apple. If they ever offered you life insurance through the job, they offer you, listen, we love you working here. We value our employees. We're going to give you life insurance for either a reduced amount, $2 to $5 a paycheck, or we're going to give it to you for free. So if anything happens to you, we're going to pay your family $100,000 or $50,000 or $75,000. The dollar amount doesn't
Mm-hmm.
matter. The part that most people miss is that your life insurance policy is probably worth 10 times the amount that they're offering to give you for free.
Wait, that's the game, bro?
That's the hustle. That's the hustle.
And then we hurry up and sign up because we like, yo, this company
It's
loves me. Bet.
Yes, and that's the benefit, right? That's the first thing I said to you in the beginning. Why do people want to work here besides just the money? Oh, I get great benefits. I get free life insurance. I'm getting extremely cheap, health insurance. I get a, if you work at Google, you guys got sleeping pods and free lunch and all this stuff, right? They give you everything to keep you there because they want you to work. Nothing's wrong with that, but understand what's
They
going on
are
behind the scenes.
a business. They're not a charity.
It's not a
So you
charity.
telling me that life insurance? I think when I used to work for a company, we won't say that company name. I think they gave me 100,000. So you saying they probably had $1 million policy on
On
me?
average, I would say it's at least 5 times. So 500 to a million, easy,
That's
without
cold.
a doubt.
That's
Yeah,
cold blooded.
I mean, you're not paying for it. What you complaining about?
Now I'm not mad at them. It's a business.
But why? But why are they? Why do they want you to be the insured on the policy? Because that cash value builds up over time. They've got access to the money,
They got access to that cash
but
value.
you don't. You're not paying for it.
So they
You don't own it.
could borrow that.
Who's the owner?
They're the
Difference.
got
You're the insured.
So
You're the beneficiary.
they got access to that cash value. They could borrow it whenever they want,
They gotta pay it back.
and they ain't gotta pay it back.
If you work in there and you pass, what happens?
The life insurance pays a policy, and they keep the
Keep the difference.
they keep the difference.
Keep the difference. They're gonna give you the $100,000 that they promised you, but then if it was a $500,000 policy and they borrowed 100, they took out 200 technically, and they got 3. Plus, who knows what they did with the other $100,000? If it's a bank, I know what they did with it. They put it into one of their accounts because, as you know about fractional lending,
Fractional
that
lending,
100,000 is not worth
a
a million.
million to them. Ooh, this is nasty.
It's
Ooh.
nasty. The game gets nasty when you
The
understand
game
what's
is
going
nasty.
on.
This is why life insurance is so powerful, and our people don't talk about it enough. Like, it is powerful, powerful tool. We're talking about exponential. I need everybody on this call to understand that your generation, right? You're one generation away from creating listen, multi-millionaires. I tell people all the time, I met Andre, where were we? We met at Recession Proof 5 years ago,
Yeah,
like in a line in Miami or
in
something.
Miami, yeah, yep,
And
online.
from that conversation that I had with Andre, my children right now are multi-millionaires. Right now. If I drop dead tomorrow, they are worth millions of dollars, right? But listen, the same $20, $30, no shade to my people. The same $20, $30 for the fish fries when Ray Ray dies in a car accident or in a shootout, right? That everybody got to put up for a platter to bury him, right? That same 20, 30, 50, $100 you could be putting into a life insurance policy, and you're leaving millions. One generation later, now you left millions. But we haven't even talked about making sure that we educate, because my children are going to be left millions, but I'm also educating them on the money that I'm leaving them, right? So that they don't blow that bag. We're not talking about making the trust the pilot. We're going to talk about that, making the trust the beneficiary, or setting up a trust fund. This is how trust fund babies are created, because every generation somebody dies, we're putting money into that trust fund, and we're just paying out the kids the dividends.
Yeah.
We'll get into that in a second.
Right.
We're talking high level stuff that isn't that complicated, as long as you have the education, the knowledge, and just execute it. It's not expensive. The banks are 10 timing your life. Yeah. Borrowing the money. Listen, you die tomorrow, in 72 hours there'll be a new job posting, and the business is up, the company's up $500,000 to $1 million on you.
Yeah.
Right? I remember when I gave my last job a 2 weeks notice. I did. I was like, I'm not giving, this is the last time I'm working. I'm going to Bellis on full time. You're not giving me 2 weeks notice? I was like, no.
For what?
No, I don't think you understand what's going on behind the scenes.
Yeah.
What are we talking about? All right, bro. Can we talk about the trust fund babies?
Yes.
Can we talk about
making the trust? Babies.
Can we talk about the trust being the life insurance, the beneficiary?
Yes. So
all right,
you can set up your life insurance policy. You want to keep it as the business owns the policy, or you want to switch it to a person? You, Herman.
So you're giving me an example. So say, for instance,
asking you in this conversation, do you want to keep the owner of the policy to be Bella Sloan, or do you want it to be Herman as the owner of the policy?
Bella Sloan.
Okay, so let's leave it as Bella Sloan, right?
Mm-hmm.
Bella Sloan owns the policy, and the insured is you. You're the insured person in this situation, gotcha. Right? Mm-hmm. Something happens to you, and the policy needs to get paid out, right?
Hold on, you're breaking up. Listen, real quick, bro. Are you in a loud environment? So maybe it is the earpiece. So let's take the earpiece out and let's see what happens.
Any better?
Much better. Much better. All right. Much better. Okay. So say, for instance, I die. What happens next?
So the insurance company is going to get notified, and they're going to pay out. They're going to pay out the death benefit on the policy. Now, and here's the good part, right? Bella Sloan owns the policy, so Bella Sloan can designate whoever Bella Sloan wants to designate as the beneficiary of the policy, because Bella Sloan owns it, not Herman.
Okay.
So if Bella Sloan says we'll pay out the money to the trust, and it could be a personal trust, it could be a business trust, it could be a family trust. You've got a lot of trust options. When that money goes, let's say it's going to go to your family trust for Herman Dose. It's going to a family trust. When the money hits the family trust, you have set up instructions already inside of your family trust. So those instructions dictate how the money that now is coming in from life insurance policy is going to be used. And now if you say, Herman, I was feeling a little funky one day, and Olivia, she can't touch none of the money until she's 27 years old, 6 months and 4 days old, and she got her college degree, and she volunteers at a soup kitchen 4 Sundays a week, 4 Sundays a year, then she'll have access to the interest only from her policy. Wait, what? Just the interest, not the principal. Not the principal. Because the principal is going to get reinvested or redistributed to either another life policy, or into some type of hard asset, real estate, or it has to buy whatever the most affordable, not the most affordable, the most popular stock is at the time. That's what the principal has to go to. Or I feel very, very insecure about the stock market. Put it into a money market account that has to at least have 8% return every year, and she can't touch any of the principal. She can only live off the interest.
Hold on a second. Hold on a second. You talking crazy. All right. Listen up and pay attention. We are setting up millionaires here. All right? High level conversation. And I'm going to break it down because I'm telling you what. You see the richest man behind me that ever lived? Somebody gave me this for my 40th birthday, Mansa Musa. Right? They put my face on his body. Listen up. Pay attention. Because I'm telling you what I am doing for Bella and Olivia. They are millionaires already. Okay, number one. Went to my man Andre. Click that arrow button, DM him, don't bother me. Because whenever I do these lives, bro, they get in my DMs. I got a question about an IUL. Somebody in the comments said this. Leave me alone. Go to Andre's DMs and leave me alone. Yeah. So drop the arrow down button right there. Follow him, get in his DMs. He helps you set it up properly. We aren't just talking this stuff. Right. Because there are salespeople out there just sell you insurance because they try to make their commission. My man Andre has been using life insurance policy to fund his life, buy cars and real estate. Yeah. This is a different conversation we're having. All right? That's number one. Number two, Andre set up a policy for me. I got insurance for both my children. The trust is the beneficiary. Because the trust is a love letter, life insurance is a love letter from the grave. That's number one. Mm-hmm. But I don't trust these girls. They 6 and 4. I don't trust them. Right. So I left instructions, right? So that when I die, the trust gets the money and the principal. So that $4 million, let's call it $4 million, because mind your business how much money it is. That $4 million that goes into that account, my kids aren't going to split $4 million. No, they're going to live off the interest of the $4 million that is invested in other things. If I want to play it safe, invest it back into another life insurance policy that's giving me on a bad year. How much per 5%. Year? 5 to 7.
Yeah, on a bad year.
5 to 7 on a bad year. On a good year.
On a good year, I mean, it depends on what type of policy is. Because if we start talking about a regular whole life, you don't have that huge upside. Mm-hmm. With an IUL policy, you can have huge upside, 10, 12% easy, right? And we're recording this, so I'm not going to do it right now. But if anyone sends me a DM or sees me at the Blueprint Summit, because I will be there, and asks me the specific question, what can I do with the cash to increase the rate of return on my money? I'll answer the question for you.
What can I do with the cash? That means they have to pull up to the Blueprint Summit. Y'all gotta wait to the end of the call because we're giving out a VIP ticket where you're coming May 22nd and May 23rd. The VIP is that's where we're gonna mix and mingle. We're gonna network and we're gonna talk big money in the room. I can't wait. So we're gonna talk. Andre bought a $500 ticket already. He's gonna give it out to somebody. He's gonna tell you how he's gonna do it. Yeah. So then my children are gonna be living. What's up, real estate guru? They're gonna be living off of the interest of the life insurance policy, and then I'm gonna teach my children, Bella and Olivia. You see how you guys get a check of $200,000 this year, every year, and then when you turn 30, it turned into $500,000 because we're compounding the interest. And by the time you're 50, you're getting $1 million a year for no reason. Mm-hmm. Let me tell you something. When you have children, I want you to set up a life insurance policy for them. Make that thing $10 million, whatever you need to do, because you got it, right? and you're going to make the trust that I set up, the beneficiary of that money, right? So that money goes in there. That 10 million gets dropped in there. Now we're talking about my grandchildren are now getting monthly or annual checks of millions of dollars. Millions
of dollars.
So do you understand 1 to 2 generations just because we have information? Yeah. We're not talking about, I got to put up 100. Guys, this is little money we're talking about that turns exponential. Yeah. It turns just on life insurance. I'm not leaving my children a $10 million check. No. The trust is getting the money. I left instructions for them to live off the interest, and every single generation until Jesus comes. My children, my family will be rich. They will eat, and they never have to work if they don't want to. This is what I'm working for.
Here's the part
I will be the last. I will be the last Dulcie to work for money. I'll be the last.
The one thing you left out in that example of once the kids are receiving that money, they're adults at that point, which means they had life insurance policies for themselves on themselves when they were coming of age.
Right.
They're paying into their policy the same way how you were paying into the
policy. Yes.
So they've got $4 million and the interest rolling off to them every single year.
Every single year.
They have their own policy that they're paying for with the money that you sent to them from the grave every single year.
Every single year.
That they now can borrow from. Right? So we're talking about the interest they're getting. They can borrow from their own policy, and then they have kids, and they're using so their kids that's your grandfather.
Mm-hmm.
Your grandfather is paying for this policy for you. That they may not have ever met you, and then their great grandkids can do this. Your great grandkids, you're paying for their policies.
We're talking about Rockefeller stuff right here. They have money. They don't know where the money coming from. Bro, let me ask you something. Do you have to hire a law firm to manage this?
To manage what, your assets?
Yeah, so like this life insurance, this trust, like who's cutting the check? Like who's in charge? Like,
so great question, right? If starting out, I don't think that you don't necessarily need one, right? I mean, especially for the insurance, the transfer of the insurance, the money from the insurance company to the trust or to whoever's going to receive it. Mm-hmm. You don't need an attorney to do so. All you need is the actual policy number and a death certificate for the person who was the insured, and the insurance company will cut the check. The more wealth that you accumulate and grow, I would advise you to get a financial professional to manage it for you. Now, here's the trick when you have a financial advisor managing your funds. Do not be like Mike Tyson. What does that mean? Do not have the person managing your funds know 10 times more than you know about your own money. You don't know what they're supposed to do. You don't know if they're doing their job or not.
Whoa. Whoa. You just gave a life lesson for so much stuff, right? Because that has to be applied everywhere. Yeah. Say that again?
Yes. Don't give the job to someone to manage your funds unless you know what they're supposed to be doing. Because if you don't know what they're supposed to be doing, you don't know if they're doing their job or not.
Hey, bro, I'm about to redo all my standard operating procedures at Bella Sloan. Now redo my descriptions. Yes, bro, facts.
You gotta know. You gotta know. So what that means for you right now, right? Everyone starts off in kindergarten. It's just the facts, right? And as the more you learn, you get the building blocks. Then you get to elementary, you get to junior high, you get to high school, you get to college. You got master's degrees, you got graduate degrees, you got doctorates. You need to educate yourself to the level of which you are on and where you're going to go. So if you didn't get there yet, you learn about it now. But the more that you know and the more you expose your brain to it, is when you start to elevate. That's just how it happens. It's just nature.
It's just nature. I love it. Bro, this was a dope call. Number one, please comment the word mentee, because he did this off the brain. No PowerPoint presentation. Listen, he has a PowerPoint that is crazy, 2-3 hours long in Bella Sloan's Academy. You guys need to comment the word mentee. He's one of our amazing mentors that talks about setting up the life insurance the proper way, because everybody says those hot things on Instagram, whole life and IUL, bro. It has to be set up properly. It has to be set up by the right person, and it has to be set up by the right company. A mutual company is super, super important. But for right now, I want you guys to please click the arrow above, follow, go in his DMs. Please do not bother me.
All right, guys. Before you say that part, right? Let's put some context.
All right.
If once you do go and follow me, DM me the word blueprint, spelled like the Blueprint Summit. So BLUPRINT. If you type in the word blue, you will not get the link, and don't be calling Herman like, what happened? This guy's a scammer. It wasn't my fault. You didn't type it in right.
Right.
So BLUPRINT. It'll send you a link to schedule a call with me. And then you can ask me whatever questions you want to ask me. We can talk about policies. We can talk about other financial structure, vehicles, and strategies. We can do whatever you want. Just do it that way. Don't just start sending me a bunch of DMs, because I'm not gonna be able to answer them all.
Are you doing this for free?
Which part?
The consultations.
Absolutely.
You are a good man.
Blueprint people.
You are a good man. My consultations are not free. You are an amazing human being, sir.
They'll be free until next weekend.
And
then they're not gonna be free until next weekend.
And then you're gonna shut it down. So listen, I'm gonna post this everywhere. I'm gonna save this live for everybody. I'm gonna put this on my YouTube. So can you please say out loud, bro, what is your email or website where people can get in touch with you?
Yes, go through Instagram. So go to Andre, ANDRE _ talks, TALKS _ Do you get the name? You see the nuance?
Yeah,
fun? You get it?
Of course you did.
I talk about money, right?
Right.
So Andre Talks Green is my Instagram. And then send me a DM, Blueprint, BLUPRINT. Send me a DM, and then it'll trigger a text and a response with a link to schedule a call. And that call is free. I'm not charging you anything. You got 30 minutes, so come ready, and we're gonna talk about whatever you want to talk about.
I love it. I love it. That's a dope question. So, bro, you're trying to give away tickets for the summit that's next weekend. How you wanna pick a winner? Because you gotta pick a winner tomorrow, so they could buy their flights or tickets or whatever. How you want them to join the sweepstakes?
So the original way was send me a DM with the word Blueprint, but because that's used now, just send me a DM with the word VIP. If you send me the word VIP, I will enter you into the raffle. Do me a favor. Send me the word VIP. Well, you're going to post this online tomorrow, right? They're not going to see it tonight on YouTube. Talking about.
They're going to see it as soon as we hang up.
Oh, all right. Well, they're going to flood my DMs.
It is what it is. Yeah, it is what it is.
Send me the word VIP. Everyone that sends me the word VIP between now and midnight tonight. So I'm cutting it off at midnight. If I get the DM after midnight, I'm sorry if you guys on the West Coast. Midnight my time, right? New York time, right? That's the cutoff. Once I get the VIP, the DM, I will enter everyone into the raffle, and I'm gonna do the raffle tomorrow evening.
All right, excellent. And you let me know who the winner is.
I'll let you know who the winner is. Yep.
And somebody coming to Philly to get the crazy gems and to pick your ear in person, because I know they got a lot of information.
And I'll give them a free consult at the Blueprint Summit, and I'll give them an hour.
Ooh, sexy. Oh, a one-on-one with you.
One-on-one, 1 hour at the summit.
Let's get it. Andre Green. Andre Talks Green. Using life insurance to become rich in this generation and in the next. Bro, I truly appreciate you giving your time, because I know it's super valuable. Give us an hour of your time. I thank you so much for that. I thank you for the free consultation, the free stuff you're giving to everybody who showed up for this call. I thank you for sponsoring the Blueprint Summit by purchasing a ticket. I truly appreciate you. Thank you, bro. Listen to everybody that tapped in. I love you as always. I appreciate you. Jesus loves you too. Andre, have a good night. I'll talk to you soon.
Thank you, bro.
Peace.
All right.